In his first four-year term that was to expire on the 18th of June 2019, Dr. Patrick Njoroge has received praise as well as criticism over his operations at the helm of the Central Bank of Kenya.
Very hands-on governor, we are likely to see now banks again now improving on their risk assessment framework, that as Caleb has said, so that now they continue incurring less in terms of the cost of risk, again in terms of the loan loss.
Under his reign, the shilling has remained fairly stable at an average of 101 shillings and 97 cents to the US dollar over the period, when most other African currencies have seen double-digit depreciation. During his term, the interest cap took root amid resistance from commercial banks who view the cap as being in contravention of best practice. The move saw lenders increase their investments in government securities, avoiding small and medium enterprises as well as individuals in efforts geared at minimizing risk.
It's only past 2016 that there was stability achieved, and then we started seeing again the trend picking up where the rates started coming down. So KBRR in itself, we agree there have been some challenges which are being addressed, but overall it has worked.
However, the regulator says banks will start offering loans to small businesses for as little as 9% following a High Court decision in March that annulled a law that limits what lenders can charge for credit at no more than 4% points above the prevailing benchmark rate. Under his stewardship, inflation has averaged at 6.2% over the period, which falls within the government's target band of 2.5 to 7.5%. Policymakers kept the main lending rate at 9% last month for a fifth consecutive meeting on the outlook that inflation would slow, which it did to 5.5% in May. Njoroge has a few feathers in his cap, including his voluntary bank consolidation to increase banks' capital requirements fivefold to force tie-ups, with now KCB PLC buying National Bank of Kenya Limited, while NIC Group PLC and Commercial Bank of Africa are merging. In his new term as CBK governor, he faces an uphill task to rein in on the current expansionary fiscal policy that's raising government borrowing amid a ballooning wage bill and an increased public debt. Currently, the budget deficit is estimated at 6.1% of gross domestic product in the year ending June 2019. President Uhuru Kenyatta, through a gazette notice, also reappointed Sheila M'Mbijiwe to the position of deputy governor for another four-year term. Mohammed Nyaoga is to serve for another term as the chair of the Central Bank of Kenya board. Regina Manyara reporting for Channel 1 Business. At the same time, National Treasury Cabinet Secretary Henry Rotich has appointed James Njoroge as Commissioner General for a term of 3 years effective 1st July 2019. Njoroge takes over from outgoing Commissioner General John Njoroge, whose term lapses on the 30th of June 2019. He has been the Commissioner for Intelligence and Strategic Operations at the authority. It is said that he was instrumental in the recent arrest of rogue KRA officials. Going forward, the incumbent faces a difficult task of ensuring that the taxman achieves its revenue target, a feat that has remained elusive for his predecessors. He ousted 4 other contenders for the position. Regina Manyara reporting for Channel 1 News.